It's a new trading week and we're seeing new record highs for the equity averages. Of course, all eyes are on central banks with the Fed meeting taking front and center stage. Joining me now is Peter Cardillo, First Standard Financial, and he will tell us about his outlook for the week. Peter, great to have you here today.
Good to be back.
Well, of course, central banks are taking front and center stage this week as we have the Fed announcement on Wednesday. But of course, details regarding its unwinding of the portfolio. And we also do have geopolitics as usual, as well as the UN General Assembly taking place this week. So how are you putting your expectations at the forefront?
Well, there's no question about it that this market remains very strong from a technical perspective. It continues to strengthen on a daily basis. We have new record highs, and obviously, as you said, the key point of the week will be the central bank. And of course, they're about to embark on reducing their huge balance sheets. That means selling off of their assets. So I think they remain pretty much on the same inflation tone that they have been. And as I said, I don't think they're going to remove the slightest possibilities of a rate hike in December.
And now that you've covered the Federal Reserve, I do want to get your take for the other central banks. This week we have the Bank of Japan as well as Norges Bank. But of course, it's been the spotlight has been on the Bank of England given recent inflation figures as well as the comments out from the Bank of England. And this week we do have Prime Minister Theresa May speaking about her revised Brexit strategy. Also, we have ECB President Mario Draghi speaking at the end of the week in Frankfurt as well as in Dublin. So could you tell us your expectations?
I don't think we'll see any real changes out of Great Britain, out of the ECB. I think they'll stay on the theme that rates may have to go up. And I think that, that's a given. As far as Mario Draghi is concerned, again, here too, I don't think, he's going to change this wishy-washy attitude that he has, in the sense that, just today we heard that the ECB indicated that perhaps the first half of 2018 means lower inflation. So in the back of the ECB mind, I think they're very much concerned about inflation. And so I don't think that that strategy changes one bit.
And before I let you go, today we're seeing the U.S. dollar higher, mostly against the majors, with the exception of the euro. And we're seeing oil come off of the $50 level and gold and silver off. But what is your outlook going forward?
I still remain quite bullish on oil. I still look for $55, $60 by the end of the year. I'm still recommended to buy the dips in gold. I think, one of these days we're going to be in for a big negative surprise. And I think that portfolios should be hedged. I don't think that you should obviously give up any long positions, but by the same token, I think you need to be very careful, and I think you need to be totally hedged.
Okay, Peter, well, thank you so much for joining me at the beginning of the week, and have a great day.
My pleasure.